What's going on, everyone? This is Andrew O'Connell with Pristine Capital coming at you with yet another market recap video. It is March 24th, 2021. Please like this video and subscribe to my channel if you enjoy this content, and I will continue to make it for you. Today, we're going to be talking about the price action in the indices. We'll go under the hood and check out our sectors and style factors. We'll talk about some of my trades for the day. And we'll wrap up with some options order flow. A lot to cover today. Let's jump right into it. Before we do that, quick risk disclaimer. Nothing in this video should be construed as investment advice or recommendations. Please follow your own trading plan and your own risk parameters. And last but not least, do not YOLO your entire account into any one of my trades. All right, so let's jump into it. Today was another bloody day in the markets. There are no ifs, ands, or buts about it. If we look at our box scores, you can see we had the S&P 500 close down 0.51%. We had the NASDAQ QQQ finish down 1.69%. We had the IWM small caps, taking the biggest loss today, down 2.31%. And we had the Dow Jones close up 0.01%. So yeah, Dow was flat today, which is pretty interesting. So if we look at our S&P 500, you can see we are still in no man's land. We are trading within this monthly value area, but today we actually broke below this monthly point of control. And you can see that pretty much every day we're getting these really wide price ranges, where depending on where you're transacting at any point during the day, you can really get yourself hurt. So say if you're buying, SPY calls or buying the SPY, up on the highs of the day, there's such a big range to get stopped out on. It is presenting, in my opinion, this is more of like a day trading environment than it is a swing trading environment with how difficult it is. But yeah, you can see we closed right on that 20-day simple moving average, or below this point of control, and we are still above that 50-day moving average. So S&P 500 definitely looking like there is more potential for downside here, and that's just something that we have to be prepared for. If a trip to this monthly value area low here at 38.34, if that would really stress you out, then that means that you have too much risk on. So it's just important to be prepared for that, because right now, again, we're in a neutral trend here on this intermediate time frame, but it looks like the momentum is to the downside. And you can see here, we talked about this the other day, where the last week of every month in 2020 has been absolutely brutal. And then, once month end comes, then you get the first of month flows, and then we end up having, historically for this year, a pretty good 2 or so weeks in the market once everyone is pretty much shaken out. So we do have, till month end, we have 1, 2, 3, 4, 5 more trading days. So for me, in my head, I'm bracing for, okay, we might have another 5, red days in the market. So I want to make sure I'm prepared for that. If we take a look at our hourly time frame, you can see, yeah, we are below this monthly value area low here, or below the weekly value area low. And you can see we've tested inside value several times, and every time it has been met with selling. So this, again, definitely a buy the dip and sell the rip market. I would say this environment is ideal for day trading or long-term investing. So if you're seeing some of these stocks, and a stock is down 15 to 20% on the day, and you go, hey, I'm going to buy that stock and I'm going to hold it for the next couple of years, then it doesn't really matter if, say, the stock drops another 10, 20% on you because you're a long-term holder. If you're trying to swing trade and you're buying these stocks when they go up and then they're coming down and then you're getting stopped out, that's where it's a really difficult environment. So I think in this environment, you either need to be very long-term or very short-term until things change and this trend flips to the upside, which it has not done yet. If we take a look at the NASDAQ, we have our NQ. You can see NASDAQ, this is on our hourly chart, very close to tagging this weekly value area low. And if we look here on this daily time frame, yeah, you can see we continue to be rejected by this value area low here. I actually shorted the Qs pretty much right as we tagged that value area low today. I covered my short in the morning. But yeah, you can see now in the Qs, we're below the 5-day EMA, and we are also below this 20-day simple moving average. So we're going to have to see, in tomorrow's session, I'm very prepared that we could end up getting some sort of, like right now I think the market's very oversold. And again, I keep saying buy the dip and sell the rip. This to me looks like, a dip that, if you're scalping, you could certainly buy it. But I didn't take anything into the close because I know there's some potential for a nice flush out tomorrow. So I think we could flush out a lot more players if we, tested even below this prior low of the day from March 19th here. So I just wanted to make sure I'm not going to overextend myself, especially when I'm taking stops, all that. So I was like, you know what, I have a couple things on my list, but I'm not going to, go for it today. So if we take a look at the IWM, this is where the major pain was. So I was getting some questions today about some individual stocks. Why is this one down so much today? And really the reason is a lot of times, like say for instance, small caps. Small caps today closed down 2.31%, a really big move. And that's if you're invested in the small cap index. If you're invested in some of the individual components of the index, a lot of times they are much more high beta. So there might be a 2.3% move down in the index, whereas if you're trading some of the individual names, it can be 10+% moves. And we saw that today with a lot of these names. So Digital Turbine, one of my favorite names to buy the dip in. I was very tempted to buy right here. I think this is probably a good location to buy it, to be honest. But I just wanted to be a little bit more disciplined, and I'll buy it if we reclaim this value area low. Yeah, this one down almost 14% today. MG&I, which is another one I trade quite frequently, down almost 15%. And this is the same thing that happened really last month, even a couple weeks ago, where sometimes all these algorithms that control the market, they all want to do the same thing at the same time. And you get these windows where some of these assets, they go no bid, where it's like no one is bidding, everyone's trying to hit the exit at the same time, and you get these crazy down 14, 13% days. For the most part, a lot of these have coincided with fantastic buying opportunities in these names. But again, just for prudence, I wasn't going out and buying MG&I today. If we take a look, let's check out, I added some new things into our slide deck today, just because today was, a huge day. The market's really getting hit. So on our Finviz heat map, you can see again, the other day we had all of these recovery plays selling off, and technology was doing okay. And now today we get the exact opposite. So yeah, I was making some adjustments, and like rather than my normal strategy, which is really like trend trading, where like, okay, if a group is getting strong, I want to buy into that group. It's not really working in this environment. Again, I keep saying, buy the dips and sell the rips. So yeah, that ends up being the case today, where a lot of these tech names really ended up getting sold. And the names that maintained their green for the day were financials, industrials, energy, and more so like those cyclical areas of the market. This is one thing I wanted to pull up. So we have the CNN Fear and Greed Index. It closed at a 41 today. So we are starting to see some fear based off of this indicator. Typically in terms of like buying dips, etc., this has been a pretty good indicator that when we have, this major fear in the market, this does present some dip buying opportunities. So again, if we do get a flush on tomorrow's open, let's say this thing flips down even lower, it's in the 30s, that'll be when you see no one on FinTwit saying, hey, I'm buying stocks. That's when you'll see everyone on FinTwit saying I'm in all cash, I'm shorting the market, this market, don't even touch it, like all that stuff. But when these things flip over, that a lot of times is when we're getting those shakeouts. A lot of people have already stopped out, etc. So I think we're getting there. It's been a very slow and painful process of getting some fear into the market because it's been a lot of, up and down, more like a, one step forward, two steps back kind of action. But this is encouraging for me to see that we're starting to see fear in the market. And yeah, it is funny because when this thing's at a 41, it's like, no, we can't buy stocks now. Are you kidding? This is too dangerous. But then when this thing is at like an 80, it's like, yeah, we can buy stocks, no problem. So yeah, this is definitely something I'm watching. This is another thing I just think it's important to go over. So a lot of these headwinds that are facing the market, we've had rising interest rates, potentially with here higher taxes. There's just a lot of different factors that are impacting the market, the reopening of the economy. And this is just some detail on what we can expect here. So you can see here, as proposed, the Biden tax plan would reduce S&P 500 2022 earnings per share estimates by 9%. So, there's a lot of people out there, that are saying the market's very overvalued. With a tax hike, that reduces company earnings, that makes, overvalued companies even more overvalued. So this is definitely significant. Like when there was the tax cuts back in 2016, that was a major boon for the market. And that's not really being political or anything like that. It's just, the tax cuts mean higher earnings mathematically. Same thing with this. A tax hike would be lower earnings mathematically. So if the tax cuts were a big boon for the market back then, these tax hikes, that's not good for the market. And that could be some of what we're seeing, priced in. It just seems like all these algorithms and all the humans in the market as well, this has just been like a cluster where nobody really knows what's going on. It's like, okay, are we allocating to recovery names now, like stay at home, inflation proxies, like all these different groups, they're kind of just bouncing around. So we have our tax hikes. Let's take a look at our sectors for today. So if we look at our sector map, very bloody day for a lot of these different groups. We had the Chinese internet names down over 8%. And there was actually a headline that came out essentially saying that the United States government is going to impose, tougher rules on these Chinese companies. And if they don't meet those requirements, they will be delisted from U.S. exchanges. So yeah, definitely some fear hitting that group. And, that group is getting hit very hard. We can see here, even companies like Tencent Music, this one was like, oh my gosh, what a nice breakout. Broke out of its range. This is an awesome buy. And then this one lost, 27% in a single day. So this is where, the risk management really comes into play. Having a plan comes into play. And in this environment, you really have to ask yourself, do I want to be trading these individual names right now, or am I more comfortable in ETFs? I know for a lot of traders, it's like this ego thing of like, I want to trade individual stocks. I can pick the best stocks, all that. One thing I'm noticing, I'm sure you guys are noticing this as well, is these individual stocks carry a lot more volatility. And there's things like a lot of these individual companies now that doubled and tripled in 2020. A lot of them are issuing equity now. And when that happens, a name that comes to mind, MP, we talked about this one as well. MP, this company, in my opinion, it's awesome. They just reported earnings. They had really nice earnings. But I remember buying MP, back when it was the FVAC ticker. It was at about $11. This thing, now it's trading in the 30s. They announced an equity offering, I believe it was yesterday or 2 days ago. And you can see this stock went from, a high of about $48, a couple days ago. Now it's trading all the way down at about $33. So that's another thing where it's like, do you want to be trading the individual names? Are you comfortable with that risk? Or do you want to just go for the ETF? So those are all things to definitely consider yeah, in this market environment. So let's take a look. And let me pull this up from the current slide. So yeah, the areas that did remain positive, we had transports, which were positive, industrials, utilities, European financials. We had the materials. I still have some calls for the materials, financials, and energy. So there were some pockets of strength. And ironically, those pockets of strength were some of the areas that were the weakest in prior days. If we pull up our style factors, you can see we had high beta stocks positive for the day, ever so slightly, up 0.1%. We had value stocks up 0.01%. But yeah, we had momentum getting crushed once again, down almost 2.5%. We had growth down 1.4% as well. All right, so let's take a look at some of my trades for the day. And today, it was very tough. For the most part, I was taking stops on a lot of trades, just trying to get out of the way of the market. I did some day trading as well. And I tried to, just be a little bit less active, take my time and not really just try to blindly buy the dip here. So this one, BEKE, I got caught in one of these Chinese names. I took a stop here for $55. I'm glad that I did because BEKE, with a lot of these other Chinese names, closed even lower, closed at 52.81. So this is another really important point, especially when you're in, either a downtrending market or a very volatile market. It's very tough because as traders, a lot of us, we anchor on our cost basis. And it's like, well, I want to exit for a winner, so I'm not going to stop out of my trade. Whereas, you really can't anchor on your cost basis. You always have to think, would I buy this asset at this current price that it's trading at? If the answer to that is no, then it doesn't really make sense for you to be in the trade. So for me, I was playing this one, okay, it's above all the key moving averages, looks like it can move higher. Now today, it traded below the 5-day EMA, below the 20-day. The overall group that it's in was weak, so it's like I got to just take this one off and get out of the way. So in line with, selling the rip today, pretty much what I did here. Yeah, so in the morning, I had some IWM calls that I was playing just for a morning pop. We ended up getting that morning pop. I closed these out for a nice scalp winner, paid $5.73 for that, closed out for $6.13. And then what I tried to do was okay, we're getting the pop, I'm going to sell the pop. So I tried to close out some of these options contracts that I knew, they're not really going to work. Even if the market, rallies here, they might be decaying, etc. So I closed out my Disney calls. Disney just looks a little bit weak. Maybe it'll set up at some point in the future. But I was like, what? I'm getting this out of my portfolio while it's still green for the day. And Disney was another one. Went from green to red later on. Micron also closed this one out. And this one just looked like it was showing relative weakness compared to some of the other semis names. So Micron. Yeah, and this one, I closed this one out when it was green in the morning. And this one ended up, really red. So a lot of times, when it comes to risk management, you really just have to suck it up, take your loss, and move forward. Because, if you don't want to take your small losses, eventually you might end up taking bigger losses. So I'm glad that I just cleared those off. And then, what else did we have here? Okay, so I closed out some Q's puts. I paid $12.29 for those. Closed them out for $14.35. So nice gain there. I entered some Q's calls for $7.69. Really just as a scalp day trade. Closed half of those out for $7.84. Then I closed the other half out for $8.10. So nice little scalp winner. Then I tried for another scalp, and this one I stopped out of. So this one, I had paid $7.83. I stopped out for $7.39. So again, for that one, it was like, all right, this trend looks like it's souring. This scalp isn't going to work. I'll take a small loss here. And then I ended up getting long some SPY 391 strike puts for $10.20. I got long those when SPY was still positive, maybe like plus 0.4%. Yeah, SPY, yeah, it ended up closing down 0.51%. So yeah, for me today, it was like, let me try to do some day trading, clean things up in the morning, and just take it a little bit slower. So I'm coming into tomorrow's session, with a hedge in place. If we do end up getting, a big flush down, that's where I would consider like, okay, some of my favorite names like Digital Turbine that I'm much more intimately familiar with. Digital Turbine I will gladly buy. Even something like MP, now that it's gotten very oversold. Looking at that one. And then this other one, PCT, looks very interesting as well. This one red candle today, but holding up really well while we're getting this sell-off. But again, I just want to make sure that I'm being patient. And really just, don't get overextended. Because that's the thing, like if your portfolio is like super overextended, when you get those red days, you're like, oh my gosh, it gets really stressful. Right now I'm at a point where, I have about 25% cash, about 25% of my money is in SPACs that are very close to the NAV, and about 50% is invested and including that as a hedge. So I feel pretty comfortable at this point with the positioning. But yeah, you can see here we have our Qs. It looks like we had some Qs puts coming in towards the morning and some more hedges, like hedges for Zoom, SPY, Snapchat. One thing I noticed is like, yeah, I guess this is better in terms of the put volume, but I am still seeing a lot of people just trying to buy the dip. So like Facebook, we're seeing calls. These are leaps. So like I said earlier, I think this is an environment for either somebody who can really like stick and move, where it's like, all right, I'm going to scalp this. I'm going to be out the same day, try to take advantage of these big ranges, or somebody that's very long term, like this person or this player buying leaps, where they're like, okay, this is volatile. I just don't think the volatility is going to last forever, that kind of thing. This person got Tesla leaps. Let's see, this person got Pinterest calls for June. Let's see what Pinterest did. It's another good name here. Yeah, Pinterest, definitely looks nothing special here, not showing strength, down 2.3%. But at the same time, Pinterest is holding within this range. This is about like $68 range that it was in last December, January, etc. So this is one where not looking too bad, looking more stable. That's another thing where, if you're too exposed to these small cap names, something to keep in mind. SPY really isn't down all that much. It's down maybe like 2 to 3%. So a lot of this weakness is concentrated in the smaller names and a lot of the high flyers from 2020. So that was the thing. In 2020, it was like, all right, the indexes are up maybe like 10%, but there's all these individual high flying names that are up 100%, 200%, 300%. Some were up about 1,000% last year. So now we're seeing a little bit of the opposite, where it's like SPY's only down 2%. A lot of these high flyers are down 20%, 30%, 40%. So it's definitely something to keep in mind, like which areas of the market am I invested in? Because a lot of these different areas are behaving very differently. If we look, yeah, I can see some Futu players coming in. Futu, this is another one. There's been a lot of dip buyers throughout the past, I would say like month or two. And, at this time, it really has not paid off to be a dip buyer in Futu. So if you look at this one, the performance for the year, the stock is up almost 1,300% on the year. So think about that. That's huge. This stock was trading, and last year it was trading for like $30, $28. and even lower than that. So yeah, huge monumental gain. If we look at the weekly chart, yeah, this thing was down at like, in the coronavirus lows, it was an $8 stock. Got all the way up to $200 a share. And you can see this is the weekly chart. We still haven't even tagged that 20 period moving average. So this is another one where we're seeing a lot of red candles in here. We're seeing some distribution. At this point it's pretty oversold. Maybe these players will be those lucky ones. But yeah, it's very tough, in this environment to really like stick your neck out like that. So we'll have to see. These players, they put a couple million behind that idea. And yeah, I would say in terms of this options order flow, I am definitely going to be looking at the put to call ratio that comes out tonight. Yesterday, it showed pretty much no fear still in the market. I want to see that fear creeping in, because that's the other pattern that I'm seeing where like it seems like, all these participants in the market, including myself, it almost seems like everyone is really oriented in that 2020 environment where almost anytime you bought puts, you lost money. Almost anytime you sold a stock, you lost money because it ended up running way further. So I think everybody is still in that like collective mindset of like, the market's red. I need to buy the dip, buy the dip, buy the dip, buy the dip, especially on these good names. Buy the dip, keep buying it, because like nobody wants to miss out on upside. So it's really like a pendulum in the market. There are times when people are fearful of the downside, and there are times when people are more fearful of missing the upside. And when I see these red days and I just see like no one buying puts still, it's like, man, what that tells me is like there's potential for more red days. So I'll be definitely checking out that put to call ratio. I'll post that one out on Twitter as soon as I see it. With that being said, hope you all had an awesome trading day. I know today was definitely very tough for most people in the market, but tomorrow's a brand new day. We're going to hit it tomorrow, and I will see you all in the pre-market session.